Hey everyone, this is Brian Bogner and Greg Towner with Parallel Financial. We're going to take the next 4 to 5 minutes here and tell you a little bit about how we are viewing the world and the economy and the market. So let's go ahead and get started. Just our 4 points here right off the bat. Stock prices are strong right now. Developed internationals looking to improve. Equity markets are fairly valued, and we're starting to see some improvement in earnings. Economic data is also improving. And even though there's a lot of good things out there, we're also going to just look a little bit here on the potential for corrections in the market that we're in. So let's talk about trends. This is the S&P 500 going all the way back to 2008. And as you can see here, we are still in a strong uptrend from the low of '08. Spent the last couple of years moving sideways, very choppy, very volatile markets. But here recently, we've finally broken out to the upside, and we're still in a good price trend. Okay, international developed, not so much. Over the past few years, it's actually been in a downtrend. But the good news is we're starting to see some price action firm up here and move higher. And so could potentially be some opportunity there here that we are looking at. Okay, Greg, I am going to go ahead and turn it over to you.
All right, great. Thank you. Well, one of the other key metrics that we always are monitoring is valuation. Now, there's a lot of different ways that you can look at valuation. Up in the top right of the screen, you see 6 different ways that we can view it. On the far right column, it shows us how much plus or minus we are compared to the long-term average. And so basically, depending on how you cut it with valuation, we're either a little bit overvalued or just a little bit undervalued. So basically, we're looking at valuation as more of kind of a neutral thing right now, not one way or the other. But importantly, with earnings inflecting over the last couple of quarters, we think that's a positive going forward for valuations. You know, after a couple of years of struggles with earnings, we've seen a really strong third quarter in earnings. It's a little early to get a full grasp on fourth quarter, but it looks like that is going to be positive. So a nice inflection point there in earnings, and that seems to be translating to the broader economy. For the last 6 months, this chart shows us that economic surprises have been to the positive. Economic data like GDP, housing data, manufacturing data, employment data has all been surpassing expectations. That's been helping to drive the market. And speaking of employment data, one of the key things that we've seen here more recently is average hourly earnings or wages are basically starting to move higher. Over the last couple of months, we've seen a nice move up in wages. Ultimately, that should be good for consumers' wallets. They'll be out spending. That will help corporations' earnings and so forth. So some nice economic data that's been coming out over the last 4 to 6 months or so. But of course, even when times are good, like they seem to be right now, we always want to be aware that there are risks out there. There's a number that we're monitoring. But corrections, as they may occur, are a normal thing. We want to remind everybody of that now when times are good. Over the last, going all the way back to 1928, basically at least 3 times per year you have a 5% pullback. About once per year you have a 10% pullback. So it's important to have a risk plan in place, have a disciplined risk management, and focus on the long term and focus on your plan.
Thanks so much, Greg. So in summary, if you can't tell, we are somewhat positive here on the market. Price trends are strong, international's improving. Again, the markets, they're not undervalued, they're fairly valued, but we're seeing a nice improvement in earnings. Economic data is also looking good. But even though we always want to keep that reminders that when times are good, there will be some corrections and things that we need to manage through. So thanks so much for tuning in today. If you have any questions, give us a call, let us know, and we'd be happy to explain any of these things that we discussed here further with you. But thanks for listening. Have a great day.